Hi everyone, welcome to the update of 9th of January. Let me start with an update of what is happening on California. The state is on fire. Actually, some of the places, not the entire state, but the biggest populated area in Los Angeles that is under a lot of fire right now. And this could get bigger. Watch out for this story. Financial damage as well as sentimental damage. This could get global. The result season started, TCS results are out and we'll talk about them in the Nugget section. Tomorrow will be the day to take positions for DMart as well as to some extent HCL Tech and Angel One because these results will be out on Monday. The last call for HDFC AMC and I'll talk about that too in the Nugget section. At the rate markets are sliding right now, people have started losing interest rapidly and this will happen across the board in cash segment in the equity market. Look at the volumes. Volumes are no longer quiet for exits. People suddenly are in a panic mode and they are throwing away stocks. Reliance is back to red, greens are rapidly reducing and the IT counters Infosys as well as HCL which are in green, their fate could get decided tomorrow. The initial prices of Infosys ADR are stable. There is no immediate panic because of the TCS results. The defense theme, this is where we left it yesterday and things changed a bit today. Mazgaon Dock was up 3.5%, Bharat Dynamics that was up. Zen Technologies is back to its winning streak, not very far off from making a new high. This stock is closest to the milestone. The other theme, railways, this is sulking as usual. Not much interest emerging, which is evident in the volumes also. Today at the top we have consumption. Auto also I would say is a part of consumption only. The big boys, Bajaj Auto, Nestle, HUL, Britannia, M&M, Tata Consumer, Asian Paints, Airtel, that's also consumption only. Titan, ITC. The place to be in today was consumption and consumption seems to be bouncing back. HUL, the heavyweight, made the most contribution to Nifty today, followed by Bajaj Auto, M&M, Airtel and Kotak Mahindra Bank. Next segment also was consumption only. TCS, which was up yesterday, that gave up all the gains from yesterday. Giving it company was HDFC Bank and Reliance. Remember, these two stocks were at the top yesterday along with ONGC. Seesaw continues and SBI also is at the bottom. Next 50, the greens are evaporating even more rapidly. Here also we had consumption at the top, Godrej Consumer, Dabur, Pidilite. Zydus from Pharma is at the top in terms of impact, followed by Pidilite, Godrej, ICICI General Insurance, and see LIC Insurance is at the right bottom, taking next 50 down most. Mostly a tail and a long one. Automobile was doing still okay. The consumption sector was rocking today. 4 heavyweights at the bottom and the crack in software was big today. And now we have consumption back at the top, followed by chemicals. Chemicals is Asian Paints. Food and tobacco also is edible consumption to a very large extent and telecom is Airtel. The seesaw, the big one today, aerospace and defense jumped in the top 5. Yesterday it was at the bottom. That's because the reds from the bottom have started going off. Nifty opened with a slight gap up but continuously down for the day. No attempt to recovery. That is why I've seen Nifty's loss and the trading range are very similar today. Bank Nifty, however, did attempt a minor recovery towards the later part of the day. Kotak Mahindra, which was not in green for significant time, among the big players, this in the green, giving company to ICICI Bank. That's because HDFC is out and SBI is in no mood to turn green. This entire pack could make fresh lows any day. No respite, only Kotak Mahindra up. The sad part is volumes were high and both Yes Bank and Bandhan Bank made new lows. I don't think any of these banks is going to get into the green zone this financial year. Same thing with PSU banks. I don't think any of them will get in the green zone in this financial year unless there's some big swap in the budget. And the interest here is also low. Volumes are very low. This time even big boy SBI is not in demand at all. This sector suddenly went out of flavor investing. It was the hottest sector for last 2 months and now we have only ICICI Securities in the green zone. And in this sector, the distance to 52-week high is suddenly increasing. Most stocks are 15-20% away. The results for stocks in this sector should be the best ever. However, this sector is spooked by two or three things. One of them is obviously the decline in the volumes in FNO. And I called that out about 2 months back when I sold off my holdings in CDSL. Now there is news in December, the mutual fund collections were slightly lower, and that really spooked the entire sector today. This is also because a lot of news channels were carrying this news in totally negative flavor, which sounded like the investors were actually withdrawing money, which is not true. The net collections were lower. Lot of investors put money in mutual funds for marriages, and marriage season is in December. People need money out. The cuts in NBFCs are getting bigger and bigger. Today, even the Bajaj franchise was under pressure. Microfinance, which was rocking last few days, that came under severe pressure as well. Spandana, after two upper circuits, was down 5.3%. The platforms were down as usual. Swiggy, after announcing the new app, that was up 4%, the only visible green in the entire pack today. Auto, Mahindra was up from the car pack, rest three were down. In two-wheelers, Bajaj was up and Ola was down a lot. They got a rap on the knuckle because their founder was tweeting ahead of releasing information on public stock exchanges. Metal stocks are shedding 2% nearly every day. The reds are ever increasing. We have 4 stocks now which could show 52-week lows tomorrow. That's Hindustan Copper, SAIL, NMDC and Tata Steel. 3 of them are steel stocks. Remember I said yesterday why I sold Oil India? Heavy profit booking. Oil India was down most 5%. Power in general on good days also has been down only. Look at the big boys here, NTPC, Tata Power, Coal. These companies are not in demand. Can you imagine? What kind of economy are we heading towards if power stocks are not in demand in the near future? No respite for the renewable stocks at all. This particular downturn has not left pharma alone as well. The good thing is the volumes are low here and there is ample green. Edible consumption was looking good today. Volumes were good and Adani Wilmar might crack a lot tomorrow. That's because there is an offer for sale with floor price of 275. The current price is 323. I see this stock probably going below 300 with immediate effect. People in general are confused only right now what to do with the stock. Tomorrow it might get thrown on the streets. Kalyan Jewellers was the biggest calamity today. Suddenly people have lost the interest in this particular stock. This is no longer profit booking. These are big cuts. Remaining sector was doing fine. The best performance today came from Marico. In fact, Imami also looked pretty good, but it cooled down towards the end of the day. If you suddenly look at the top, there is only one red remaining in the large companies, that's Asian Paints. 2025 is not looking pretty at all, at least in terms of dashboards. And one of the main reasons is the huge FI selling which continues. In fact, the devil lies in the detail. This 7,000 crore is 15,000 crore sales, what they already hold. And then they net bought 8,500 crores. This is what FIs found more valuable today. Now, one of these parties would be terribly wrong at the end of this quarter. Let's see which one. Now, TCS results came with 3 independent news and these left me a little confused and in humor. One is TCS promoted 25,000 employees in Q3, nearly 20% of workforce. But still their headcount shrunk by 5,370. Every 1 in 5 employees got promoted, but still a lot of them left. People are no longer caring for promotions, it seems, in TCS. And then TCS also said that AI is creating more jobs, but TCS is losing people, reducing people at least. Silver is inching up every day, slowly, steadily. Now 92,000, gold is at 78,000. We might see a century of silver within this quarter, and gold, if the duties are raised again in the budget somewhere around it, this may go above 90,000 now. My trade for the day, I did not sell anything today. It was a terrible market. I bought a bit of HDFC AMC and I'll talk about it in the Nugget section. Airtel, I'm just trying a game right now based upon volumes. I thought that Kalyan Jewellers results will be fantastic while I own already a lot of it. I bought a little of it. I might sell it tomorrow. I personally have a gut feel that tomorrow will be a better day and Kalyan Jewellers will be up 4-5% tomorrow. TCS results. Sales wise, this quarter the sales was 63,900 crores compared to last quarter 64,259 crores. Same quarter, which is December quarter of previous year, this was 60,583 crore. So a dip this quarter compared to previous quarter of 0.5% and 5.6% up compared to the previous year. This trend is not good. Expense wise, expense are reflection of employee strength only. So expense obviously was lower here because the revenue was lower. In any case, TCS did not backfill 5,000 people and it increased 6.2% compared to this quarter. Employee cost is 56% of the overall cost, lower than previous quarter, lower than year on year. There is a dip in the employee cost by 3% and increase of 4.34% if you look at the mirror from year on year perspective. Operating margin as a result, because there is a dip in employee cost, was slightly higher at 27%. The devil is in the detail, like I say at times. Last year, this particular number of other income was minus 93 crore and this changed to 1243 crore. Roughly 1100 crore extra contribution to the profit coming out of direct sales. This is what pumped up the results. The tax numbers are similar at 25%. Net profit, if you see year on year, 1400 crores up with a significant contribution of other income. That is why you are seeing the news flashes of fantastic growth in profit of 12% year on year. Last year, this particular sales number was okay and other income as a result was not required. That was kept negative. As a side effect of this net profit thing, EPS increased from 30 to 34. This is a 12% increase in earning per share. Quarter on quarter, this is a 4% increase. I would still rate this particular result as A minus, slightly less than A. That's because most of the December people are in holiday mood. Most companies are already out of their annual budgets. The budgeting in most international companies would be underway right now for the people whose financial year starts from January. The orders will probably go out somewhere in Jan and or February, and Q2 onwards the number should start looking better. One thing to note is some of these segments are not looking good. This may give good insight into how the other segments are doing from business perspective. For example, in manufacturing, the revenue is less, which means manufacturing sector is doing less automation right now. This is a segment revenue. Now in terms of stock prices, this particular point of roughly 4,000 seems to be a temporary bottom for TCS if markets hold, and TCS is right now at 4040. And I expect tomorrow that TCS will open with a little gap up of 2-3% kinds. As a result, people who are confused will digest the results as good in the euphoria. This may pick up the other IT stocks also. I am not expecting TCS to crack tomorrow. Markets will take the results. Second nugget of the day, HDFC AMC. Now HDFC, despite the merger of HDFC Limited and HDFC Bank, continues to be a confused company. You have hdfcbank.com, you have HDFC MUF, which is mutualfund.com, which is now called HDFC AMC. You have HDFC Securities separately. Thankfully, my home loan login now has a session bridge to HDFC Bank. It is still a separate site, just that you can log in from HDFC Bank site. So there is no real synergy still in HDFC. That is why perhaps the stock also continues to sulk. They are not able to manage the IT part at least. Now HDFC AMC is the number one company by market cap in the investment banking pack. This is my dashboard, and this is a mixed dashboard because not all of them do the same business completely. The biggest player by size, 85,000 crore, means that the business for this particular company is the highest, which is say the ETFs, mutual funds, the asset management part plus the fund part, which means that most of the investors trust HDFC AMC by volume. And this particular segment has done pretty well in Q3. DI inflow has continued, retail appetite has been high, retails have continued to put more money directly into equities, into mutual funds, into ETFs. So I believe this quarter for HDFC AMC, not just HDFC AMC, other companies like Motilal Oswal, Nippon, all these companies, especially Angel One, because it is very low right now, to be very good. If you look at the 5-year graph, the current PE of the stock is less than the median PE of 5 years. This stock is cheaper. And see this EPS, it is continuously increasing. There is no trend break. If I was to see the 1-year graph, the TTM PE is 43. Right now the stock is around 38.5. It has dipped a lot since December. So unless we are re-rating the entire sector lower right now and the EPS is not going down, this stock is cheap and probably looking lucrative. Now quarter result, if you see 887 September, 775, 695, 671, 643, good trend. There is no aberration in sales in any quarter. Operating profit 7054, 595, 539, 511, 482, 429, 411. Healthy increase in operating profit continuously. Now the fantastic part here is the operating margin is continuously improving. That is because a lot of their sales is digital. The IT part is done and then there is maintenance and continuous improvement, which is okay. But 80% OPM, fantastic stuff. Now after all this, if you see the profit before tax 501, 492, 571, 589, 639, 679, 752, 859, good healthy trend. Same with net profit, same with EPS. 27 for the quarter, 28, 25, 22. In fact, TTM is saying 103 right now. The TTM net profit and EPS should be higher than what is being projected here. Now for the kind of operating margin they are showing and the kind of growth they are showing, I think 40 PE is too low. If 100 EPS is given a PE of say 50, then this is a 5,000 rupees stock. It is way below that right now. I in general don't hold the stock. I have just bought it for trading purpose now for the result part. I have Motilal Oswal with me. I have Angel One and JM Financial. This is my investment pack for the result season. Now HDFC AMC has joined it. Hope this analysis was useful. Thanks for watching and I will see you tomorrow.